Hi everybody, my name is Mary Redmond and I'm talking again about the euro, and my bias is still to the downside for the euro for the coming week, which is going to be the week of the 22nd to the 27th, although I think that it has really basically consolidated over the last week, which is understandable. There was a big drop of nearly 700, actually over 700 pips. And we did see a bounce back up again in the euro to what looks like a false breakout of its downward trending channel and a bump up against the 50-day moving average before a retracement again. So you can see that the euro-US dollar pair, it's now currently below its 50-day moving average and its 10 and 5-day moving averages too. And the 200-day moving average is coming in here right around 37.8. So it's possible we could see a spike down this week to that level. And of course, it really depends. This particular pair is, of course, moves basically on the news right now, and the news of what's going on in the market with the Greek bailout talks. And as of last Friday and as of today, which is Sunday, there hasn't been any definitive statement from anyone in the EU about what they plan to do about this. And the news sources are saying that Mr. Papandreou, the Greek Prime Minister, is willing and is discussing the potential of selling up to 50 billion euros worth of Greek assets to help make some of their loan payments, which is a pretty extreme measure, and that isn't necessarily something that could be done in just a few days, because unloading assets can take a period of time, like unloading any type of real estate. So there, everybody's putting in their 2 cents, and there are a lot of different articles and analysts and the finance ministers who are talking about this, and some of them are contradicting each other, but nobody's denying the fact that it's a very serious problem, and I think there's going to be some pressure on the euro while this is going on. So the ECB had previously stated that they have been threatening to deny some of the Greek banks access to the ECB liquidity and refinancing if Greece were to actually default on their bonds. Well, that would be a very extreme measure. That would almost be the equivalent of throwing Greece out of the Eurozone and making them go back to their own currency, which could cause a lot of real crises. So the EU finance ministers and the ECB have got to get together and state what they're going to do in very clear, specific terms, or else there's going to be this uncertainty hanging over the market. And one of the reasons why the euro is still so high is that the markets are still expecting and pricing in over 90 basis points of rate hikes from the ECB in the next 12 months. So it remains to be seen how much of that is actually going to happen. And while this problem with these smaller countries it's still basically contained, it's a very small part of the EU. I mean, you have to realize that Greece only has a $300 billion economy, and Germany, France, and Italy, their economies together are over $7 trillion. So, you're talking about these large countries that are paying into the European Financial Stability Fund, and the small countries which are facing a lot of very severe economic problems as a result of these austerity budgets which have been forced to be imposed on them. So one thing to keep an eye on is the volatility index. That's always very important, because there's always a direct correlation between credit spreads and increasing LIBOR rates and the volatility index. So we did see a little spike up here in the VIX this week, and it looks like it's almost at its 50-day moving average. It's still at historic lows. I mean, when there was the severe credit crisis several years ago and the subprime mortgage, the VIX spiked to an all-time high, which was near 90. And since then, of course, it's been trading lower. Part of the reason for that is the Federal Reserve's quantitative easing program, and part of the reason is that you can see that back in last March, when the EU had this problem previously with Greece needing to borrow money, they didn't yet have the European Financial Stability Fund. So that was another big spike up in the VIX. So if we see a consistent move upward in the volatility index, then that could be a signal that the credit markets are starting to become a lot more worried about these problems. So you've also got always have some economic reports to look at, and this week we've got the Purchasing Managers Index in the EU as a whole and the Purchasing Managers Index in Germany, and these are very important. On Tuesday you're going to have you've got the German IFO, you've got the new home sales, but you've also got, which is maybe even more important, you've got the German GDP numbers. So really Germany is pulling the EU through all of this because they're such a large economy and because they're the primary contributor to the fund. It's very important that Germany keeps their rate of economic growth up for the perception of the euro. I mean, if there's any sign that there's going to be a slowdown in Germany, or that their GDP may not meet the growth targets, you could probably see a very strong reaction in the euro. But of course we haven't seen that yet, so that's one of the reasons why the euro is still above $1.40. And then of course you've got the US GDP, and that's going to be coming out later in the week. And of course that's important because as long as the US economy is still growing and you still have strong employment growth, then the markets are going to assume that the quantitative easing will end as planned in June, and that the Fed may even just keep rates on hold for a while and monitor the situation. And the Federal Reserve did come out and say themselves that they don't plan to implement any quantitative easing number 3 unless there are extraordinary circumstances in the market. So I think we could see a move down to the bottom of this channel this week, and of course it always depends on the news. There's also a G8 meeting this week on the 26th and the 27th of May. So what I'd like to do is, if we see a spike up to the top part of this channel again, maybe the 42.5 level, that would probably be a good short. And I do think it's going to go down probably in the next couple of weeks and hit the 138.5 level. So no matter what the EU decides to do about this particular situation, and there are a number of options they have to consider. One analyst had mentioned a European Financial Stability Fund swap of their own AAA bonds for the Greek bonds, which are less liquid, and the financial institutions which hold these Greek bonds might not be able to get rid of them. That's part of the problem. So they can't just write it off as a loss. So if they could trade them for some other type of European bonds which are more liquid in the market, then the banks could simply write some of these debts off as a loss and move on with it. So we'll see whatever they plan to do, but at any rate, until it makes a definitive breakout of this channel, I'm still interested in shorting the euro around 42.5.